Stocks near the day's highs amid mixed earnings announcements. Utilities as well as metals and IT lead the gains today, while the FMCG pack drags and the mid-cap outperform today in trade.
NTPC turns in a weaker than expected revenue performance, but profitability improves on lower input costs. Analysts remain upbeat on the company's green initiatives and upcoming capacity addition, as well as the sector.
RVNL seals an agreement with its bid partners for the Vande Bharat trains contract, ending uncertainty over its execution. Meanwhile, Siemens plans to divest its LV and geared motors business is rejected by the shareholders in a reprieve for the stock.
Marico slips despite an in-line performance on profit booking, and a contraction in volumes hurts United Breweries. A decline in interest income tells on Piramal Enterprises despite its buyback offer.
TCS announces its first organization restructuring under the new CEO K. Krithivasan, creating the business groups for verticals and geographies. The earlier grouping was based on size of accounts. Hello and welcome. You've tuned into Business Lunch. I'm Nisha Podar, and with me as always is Pavitra Parekh. So Pavitra, stocks are in the green at lunch hour, and let's take a look at the markets. Yeah. Of course, Nifty 50 at 19,692 levels. And yes, it's finding comfort around the mid 19,000 levels, it looks like, with 50 points gain at lunch hour, and also sensex with 172 point gains. Remember that it is closer. Nifty 50 is closer right now to the higher point of the trading session. Bank Nifty, when we talk about that, that's slightly underperforming. The key indices today are flattish to in the green, but mid caps are the place of really comfort right now in the markets, with over 0.5% gain in the markets at the moment, 0.65% gain on mid caps, and that's also revving up the number of advances to the declines. So today, right now, the market's in favor of the advances. Some of the counters doing extremely well and giving that kind of push to Nifty 50 are the kinds of NTPC, Adani Ports, ONGC, Power Grid, and also keep an eye out on big boy Reliance Industries. In terms of some of the losers at this point, Apollo Hospitals, Britannia, some of the FMCG stocks are not doing that well, along with some pharma names as well. Pavitra.
Oh, absolutely. I think the good news is that we've come off the opening highs, but for the past 2 hours or so, we've been stuck with this 50-60 point kind of gain. What's doing well? You have a lot of the PSU companies. NTPC is topping the charts, but you also have names like ONGC, Power Grid, which are doing very well. The metals pack is up and about today, so that sector is seeing good gains as well. Some of the larger ones will be up for you. And then you're seeing lots in terms of earnings reaction, because we are coming out of the weekend. So you have names like Power Mech, which are surging, names like, Five Star Finance, LT Foods. These ones are names from the mid-cap space which are seeing outsized moves. On the downside, like Nisha was pointing out, it is all of the, FMCG counters which are seeing some cuts. And you also, once again, have a lot of the financials on the back of their earnings. So names like DCB Bank, something like a Fino Payments also seeing some cuts today. That is the shape of the market. But let's start by talking about the power stocks which are in focus this afternoon, with names like NTPC, Power Grid, all buzzing around in trade. In fact, NTPC is the top Nifty gainer today, in spite of the fact that the performance was not all that good. So the company reported a mixed operational performance if you look at the first quarter. But what the street, continues to remain bullish on is a lot of their green power initiatives. So Vivek is here to fill us in with all of the details. Vivek, there's no stopping NTPC.
Well, absolutely right. When you're talking about NTPC, remember, it's a steady regulated business model that the company enjoys, and which is why, earning steadiness is always there as far as, quarterly results are concerned. Now, talking about the numbers themselves, slightly subdued compared to the poll and compared to what analysts were anticipating. Revenues were muted given the fact that unseasonal rains actually impacted the demand, leading to lower generation, and that impacted the top line. But the core EBITDA, or the operational EBITDA that we are looking at, was quite strong, aided both by lower fuel costs and also lower expenses. So operational efficiency is kicking in, leading to a significant expansion as far as margins were concerned. When you're talking about the profitability was higher by almost 9%, a slight miss versus our estimates. But despite that, good operational quarter as far as NTPC was concerned. Now, talking about, what analysts had to say, Citi believes that, first quarter was a steady quarter operationally, and the company also saw multiple developments as far as green energy initiatives were concerned. And what they say is that along with the thermal capacity addition that the company has planned for the next couple of years, that should continue to aid the stock performance. Along with that, NTPC, there is significant valuation comfort, and they believe at 1.2 times price to book earnings FY25 estimate is quite attractive given the fact that the company manages to generate an ROE of over 12%. All of these factors has kept NTPC quite buoyant in today's trading session.
All right, Vivek, thanks a lot for getting us all of the details there. In fact, NTPC is the stock that we are going to discuss in our special YouTube offering, Who Moved the Market today. So don't forget to tune into that conversation at 2 p.m. with Surbhi and Vivek.
All right, so that was about NTPC's earnings. Now, Marico, that reported an inline set of Q1 numbers, and the FMCG major reported, remember, the domestic volume growth of 3% and expects the revenue growth to move into the positive zone in the second half of this financial year. Now, the company recently bought a majority stake in D2C brand Plix. We earlier spoke to Saugata Gupta, who's the MD and CEO at Marico. Listen in to the way forward and about the performance of the company.
We've looked at some of the capabilities that are required to do digital business, including addressable market, the way they do digital marketing, and the founders. I think all of them sound exciting. And I believe that they will on the growth path. At the same time, what is also encouraging is they are doing it at a very low cash burn. All we can say is that definitely we believe that I think at the 3% which we did, we could have perhaps a little more, but for the one-offs. And we expect this one to gradually improve as we move to quarter 2 to quarter 4. This year also we started out with growing spend, but yes, the A&P percentage might move up a little bit, and we will continue to invest to get back growth. This is a great opportunity, I think, to get back growth and protect market share. As you know that in the last quarter also in 85% of the portfolio, we gained a protected market share and penetration. So therefore that journey will continue, and therefore going forward, some of the gains of gross margin will be plowed towards ad spend.
All right, that is the management of Marico. But sticking with earnings, Piramal Enterprises is under pressure after reporting its first quarter numbers. So net interest margin has contracted 25% if you look at it sequentially. While if you look at the margins, they've come off both on a year-on-year as well as on a sequential basis. Earlier today, we actually had the chance to speak with Ajay Piramal, chairman of the Piramal Group, on the 1750 crore rupee buyback that they've also announced. So listen in to what he had to say.
Even now, after this buyback, our debt equity only goes to 1.3 times.
Okay.
Therefore, even if I take a growth of 20-25% for the next 4 or 5 years, I don't think we will need any more equity.
All right, Piramal Enterprises, despite a buyback, is under pressure. RVNL is buzzing in trade today as the company reaches an agreement with its Russian partner for the Vande Bharat orders. Earlier, we spoke to Rajesh Prasad, who's the director of operations at RVNL, and he spoke about this particular order in detail and also the order pipeline for the company. Listen in.
This is basically a modernization of coaches. Today I was going through a newspaper and where I found that Ministry of Railway is trying to basically renew these 800 old coaches. These Vande Bharat coaches are having better safety parameters, more comfortable, they are faster, and aerodynamically it is designed. It has got faster acceleration, faster deceleration. So we have got a contract of 120 train sets and at the rate of 120 crores, and these train sets will be manufactured at Latur. This has got the comprehensive maintenance component, and the average cost is around 4% every year for this 120 train sets. Order book has now gone up. We have got around 65,000 crores. 35,000 crores is through the nomination, and the bidding part has now gone up to 30,000 crores. And if you realize that we have started participating in less than 2 years, we have participated in 169 bids, and total costing around 95,000 crores, and we have got 30,000 crores. Few bids are yet to be finalized, so the success rate is more than 25%, and we want to have a target to have the order book of 75,000 crores to 1 lakh crores, so we are coming nearer to 75,000 crores. The first IPO came in the April 2019, 12.16%. Then OFS1 was 9.64%. Now, during that time, approval was taken for 15%. So the remaining part was 5.36%. So this time OFS2 was 5.36%, which had an option of 1.96% through Green's SU option. So the floor price was 119, and the money which has been collected through OFS2 was 1365 crores, more than 1350 crores. And earlier IPO was 475 crores and OFS1 was 550 crores. And this is as per the SEBI regulations. That is the minimum public shareholders. That minimum should be 25%. So we have crossed that barrier of 25%.
All right, that is RVNL. The stock, by the way, today is doing quite well, 3.5% higher on the fact that they have managed to reach an agreement for the Vande Bharat order. But with that, it is time for a short break. When we return, Maruti is the key stock to track today ahead of its first quarter numbers. Should be, out anytime soon. We're going to line up the expectations on the other side. Welcome back. You're still tuned into Business Lunch, and let's now talk about some more stocks which are in focus. TCS has announced a new operating structure and leadership roles for various verticals. Remember, this is the first organizational restructuring that we are seeing under the new CEO, K. Krithivasan. So Reema is here to tell us more about what has been announced. Reema.
Thanks so much for that. So as you pointed out, the new CEO of TCS, K. Krithivasan, he's an old-timer, he's a veteran in the company for more than 40 years, but he took charge as the position of CEO on 1st of June as he's announced a fresh restructuring, a fresh organizational restructuring, and this is the first major change by the new CEO of TCS. Now earlier, TCS was divided or grouped into 4 units based on the account size, which basically means there was one head for all accounts under $20 million in size. There was one head for all accounts ranging between $20 to $100 million. Another head for all accounts with a size of more than $100 million, irrespective of the geography, irrespective of the vertical, like BFSI manufacturing. They were grouped based on the client side. But this, according to some people, perhaps resulted in less ownership, because very often one client would move from $20 million category to $100 million, and then the reporting head would change. Now TCS under K. Krithivasan has gone back to the old traditional structure, wherein the company will be reorganized, the heads of will be reorganized based on the verticals, which means BFSI, manufacturing, retail, healthcare, communication. So as a part of this, they've also announced fresh senior leadership. Now, for instance, BFSI, which is the largest contributor to the company's revenue, has been split. There is one head for BFSI America, and there is another head for BFSI, the rest of it, which is Europe, UK, as well as Australia. And then you've got different heads, as I said, for the other verticals like communication, life sciences, manufacturing, retail, tech and services. Back to you.
All right. Thanks so much, Reema, for all those details. Indeed, a big corporate development at TCS there with the restructuring. Now to some important earnings we are going to track this afternoon. Maruti Suzuki will be reporting its numbers today. And Sonia Shenoy is right here with the key expectations and what lies ahead. Tell us, Sonia.
Well, thanks a lot for that. As you rightly pointed out, it's expected to be a good quarter for Maruti. A 20% revenue growth is what we're looking at. The margins will go up substantially compared to what we saw last year, but all of this is on the back of a low base. If you just look at the numbers this time around, the volume growth was in single digits for Maruti. It was about a 6% volume growth, and the company clocked in a little under 5 lakh units. But the real price appreciation happened on the realization front because the company has taken an average selling price hike of around 12% year on year and passed it on to consumers, and that aided their realizations, and hence there'll be that big boost to margins. Now, if you look at it, there was a higher mix of the SUV segment as well, so the product mix is richer, which helped them in their realizations further. However, on a quarter-on-quarter basis, the EBITDA margins could decline slightly because of a marginal decline in volumes compared to last quarter. higher discounts per vehicle and higher advertisement spends on account of the newer launches. So quarter on quarter, a little bit of a fall. Otherwise, year-on-year numbers are expected to look quite good. We'll await management commentary on what the growth would look like. They have spoken about a 6 to 8% growth for the industry in FY24. Just one word on the valuations as well. The stock is currently trading at around 27 times FY24 and 23 times FY25. Now, as per FY24 estimates, it's largely in line with historic averages, which has been around 26, 27 times. So not too much headroom in terms of valuations, but the numbers are expected to look good. Back to you.
All right, good set expected. Sonia, thanks a lot for getting us those expectations. With that, let's move on and also bring you some important macro cues that we are tracking coming in from China, where factory activity for the month of July has contracted for the 4th straight month, while non-manufacturing activity has slowed to its weakest this year as well. So the official PMI came in at 49.3%. This is in July, which is a tad better than the consensus estimate of 49.2%.
All right, on that note, while you digest all of that data, we'll slip into a short breather on Business Lunch, but we'll get you more news and updates on the other side. So stay tuned to Business Lunch. Welcome back. You're watching Business Lunch. A quick look at the markets. Well, Bank Nifty has started participating more actively, has gained a lot of ground in the last few minutes of trade, and a lot of that can be owed to the big boy HDFC Bank. Keep an eye out on that counter. It has seen a sudden rise, about 0.5% gain at the moment. All right, let's talk about more economic factors then. And tomato prices, they continue to bite in the state of Tamil Nadu, and the prices have now soared to 200 rupees per kilo and expected to inch even higher as heavy rainfall has hit supply in South India. Now, this is a, remember, steep surge from 150 rupees per kg, that was last week, and a double whammy for the farmers and traders who were earlier grappling with the tight supply due to the delay in the monsoons. Meanwhile, also remember that tomato continues to be sold at more than 160 rupees per kg in several other states in the country. So looks like, Pavitra, a lot of our favorite dishes are going to go out of menu or are going to become dearer.
Oh, absolutely. And this has actually been quite a problem, right? I mean, across the country, this is an essential staple and, considering that prices are flying off this way. But that is a story that we continue to track. In more news, the penultimate week of the monsoon session, which commenced on July 20th, is upon us. So tensions are flaring over Manipur once again. The opposition has moved a no-confidence motion against the Modi government, claiming that they have failed to restore peace in Manipur. Meanwhile, Union Minister Piyush Goyal has also hit back, saying that the opposition is against a discussion on Manipur. He said that the government has kept its promise of speaking about the issues in Manipur, and he also said that if the opposition is ready, then they can hold a discussion on this at 2 p.m. The Lok Sabha is adjourned till 2 p.m. But this, of course, is a very crucial matter that we continue to look at.
All right, and let's take it to a tragic incident that happened. 4 people have lost their lives after a Railway Protection Force constable identified as Chetan Kumar shot dead his assistant sub-inspector and also 3 other passengers on the train early this morning as the train was approaching Mumbai. Now, the accused has been arrested and a preliminary investigation has revealed that the constable used his official weapon in the incident, though the motive is still not known of this shocking incident.
All right, that is some extremely tragic news coming in. But on that note, we're going to have to wind down on this edition of Business Lunch. You guys stay with us. Midcap Radar is up next after this short break.